Alright, in this video I'm going to answer the question, is Broadcom stock a buy? So you're going to want to stay tuned to the end of this video because you're going to get the answer. So let's get right into it. Alright, so the first step in my framework looks at customer value, and Broadcom designs, develops, and supplies analog and digital semiconductor chips used in wireless communication devices, enterprise storage, and industrial equipment. And revenue has grown from 2.3 billion in 2012 to 27.5 billion in 2021. Of course, this was partly fueled by the acquisition, by a major acquisition that jump-started revenue growth. And looking at a net promoter score of -9, if we look at the scale here, a net PS of -9 shows that it needs improvement. It's on this red scale here, and that's not good news for investors, because if the company is not earning, is not highly regarded by its customers, then that could be an opening for competitors to jump in and take market share. The next step in my framework looks at unit economics, and for Broadcom, it's got excellent and rising profit margin. It's averaged a gross profit margin of 50% in the last decade, and EBIT averaged 20% in that same time. In 2021, those were even higher, GPM of 61% and EBIT of 32%. Perhaps this could explain why it's got such a low net promoter score. Maybe customers are just like, man, you keep charging us so much for your products and equipment that we just feel like you're extracting all of that value from us, and we feel like, yeah, we're buying your stuff, but we're not too thrilled about it because we're having to pay so much for it. That could be one argument, but it's great news for investors that Broadcom is able to extract such excellent margins. And the next step in my framework looks at total addressable market, and according to Statista, the global semiconductor industry generated 555 billion in sales in 2021. That's expected to be higher in 2022, and for the foreseeable future, semiconductor chips are getting increasing demand worldwide, in smartphones, in computers, in electric vehicles, driverless cars, all across the industry, all across several industries. More of these chips are being needed, and so the industry is already massive. It's going to continue growing, and so that's great news for investors. The next step looks at competition, and the semiconductor industry is characterized by large capital investments in manufacturing and research and development. This is where the competition is investing in these foundries, in these manufacturing facilities, in research and development to come up with the next best thing and to come up with large economies in scale, and that way able to sell your products at lower prices. This isn't an industry where it's the competition is based on who can have the best marketing campaign, who can have the best sales force, right? It's mostly based in these capital investments in manufacturing and research and development. So it's difficult to usurp existing players that already have proven processes that deliver innovation at scale. So if you've already proven yourself in these processes, you've jumped several levels in the learning curve, it's going to be difficult for a new company to come in and reach the level you're at and take your market share, take your business. And this is good news for investors. The next step in my framework looks at valuation, and Broadcom, looking at price to earnings and price to free cash flow, is, the stock is inexpensive. I can't say that it's cheap. If we look at its price to earnings of 22.9 going back before 2018, it's not the highest it's been. It was trading at over 60, and it's almost a third of its peak, but you were able to buy it at a lower valuation, before 2019, going back to 2018. For almost an entire year you could have bought it at this value. So it's not the cheapest it's been, but it's close to, its lower levels. And then if we look at the price to free cash flow of 14.8, it's about the average price it's traded for going back to 2018. It's been higher at over 20, it's been lower at below 10, but this is right about the average. If we draw a line through here, it's about the average valuation in terms of price to free cash flow. So it's not expensive and it's not cheap. The final step in my framework looks at risks, and one of the primary risks I note here is that Broadcom is in the middle of acquiring VMware. It paid $61 billion for this acquisition. It's pending regulatory approval, and the digesting of this acquisition could prove troublesome. Acquisitions are always a risky endeavor, and this one is so expensive, $61 billion. So this could be a troublesome area. Some unknowns could come out of this. This is something investors should keep an eye on. And of course, the potential recession in large economies worldwide could slow enterprise spending on tech infrastructure. This could be a headwind for Broadcom. Although of all the semiconductor companies, Broadcom has been kind of an outlier in that it hasn't noted major headwinds to its business. Several other semiconductor companies, like Micron, for example, has noted major headwinds, elevated inventory levels, and that hasn't been the case for Broadcom. It's got a healthy business for now, although how long can it be an outlier in an industry that's facing these headwinds? So keep an eye out for that. That could be a risk here for Broadcom. Now that I've looked at each step of my framework as it relates to Micron, let's give it a grade. Customer value, I gave them a B-, even though revenue has grown exponentially. The low score in terms of customer value is not a good sign there. I gave them a B-. Unit economics, I gave them an A+ here. Excellent gross profit and operating profit margins, A+ there. A+ in total addressable market. They're addressing a massive $500 billion market that's expected to grow for almost more than a decade. Competition, I gave them an A here. They've done an excellent job in reaching economies and scale to earn these high profit margins. Proven innovation, hard for anybody to come in and take market share from them. Risks, I gave them a B because although there's little evidence of the macroeconomic risks that it's facing, the pending acquisition could be a risk, and I'm skeptical how long it can be an outlier in terms of not facing the same headwinds that other semiconductor companies are facing. And finally, valuation, I gave them an A because they're they're fairly valued. They're not expensive going back historically, and the fact that the industry is expected to grow so quickly over the next decade, and the fact that its valuation is not expensive is a good combination here. So I gave it an A in that regard. All right, so now that I've given it a grade in each step, it's going to be time to answer the question if the stock is a buy. But before I do that, I would like to recommend for you to subscribe to my channel, because this recommendation whether to buy the stock or not is not a static one. It's going to change, and if you're subscribed to my channel, you're going to get the updates. You're going to want to get those updates and not miss out on those. So go ahead and hit that subscribe button while I switch over to the next slide and answer the question, is Broadcom stock a buy? Broadcom stock is a buy. The absolutely excellent profit margins coupled with the massive market opportunity and relatively inexpensive valuation says that this could be a great time to buy Broadcom stock for investors. It could be perhaps that many investors are skeptical with the fact that Broadcom hasn't faced these headwinds that other semiconductors are facing, and so its stock is not expensive when it's performing so well. The company's performing so well, so that could be an opportunity here to jump in and buy Broadcom stock. Add it to your portfolios. If you need a semiconductor stock in those portfolios, go ahead and add Broadcom stock. All right, so that's all I've got for this video. Thank you for tuning in, and if you're subscribed, which I hope you are, I'll see you in the next installment. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.